was great. We just saved a few minutes right there and then. I know the conversations yesterday and this morning have pretty much led us to this point where we're looking at those sustainable finance opportunities. How do you really mobilize investments? How do you tackle the barriers? How does one promote it, promote its impact, and manage expectations of the market? And how do you actually drive market transformation? I think it really truly comes down to grasping the opportunity and making it reality. I think the big question for the two of you is, how do you make it sexy?
Is that for me?
Both of you.
I feel like I'm at dinner with my girlfriend. Well, I think one of the advantages, I mean, I've been in finance for well, I hate to say almost 30 years now. And this is the first time where I can go home and talk to my children, and they don't really get what I'm talking about because they're quite young. And they say, gosh, Dad, that's fantastic. So I don't know if that's sexy, but as far as I'm concerned, it's amazing to be able to be in finance and do things that are relevant to young children, and they understand. And you know, you try to summarize it and say, I'm saving the planet, which of course you know is not the case, but we're contributing to dealing with you know, what is one of the key issues of our time. So in that respect, I'm not sure we need to be sexy. I think we're already terrifically relevant.
If we're terrifically relevant, Stanislas, I think the question then is, how do you convert the cynics out there, and how do you grow this market? Because you guys have done a phenomenal job of doubling the market size already, but it's still pretty small. I'm talking about green bonds here, to clarify.
Yeah, on the sexy side, I truly agree that I think it's already sexy because it's very pushed by the market, by societies. So people are seduced, interested in the issue. What do you have to do when you're an asset manager, both in front of your portfolio managers and in front of your clients, is just to prove it's efficient and it's relevant, you're right. So we've always been, at Amundi, very much involved in SRI, sustainable, social responsible investment. And we really, at the beginning, now of course, it's a grown market and rather mature market in France, but at the beginning we were really instrumental in building the market. And again, on the green bond side you just referred to, the same, we've been instrumental in finding solutions and convincing big clients that they could invest rightly in these solutions. And I think the last one, very interesting and innovative, is the one we're doing with the IFC, World Bank, because there it's a solution by which we draw money from developed countries to emerging markets where the green bond market is not existing very much, but still you can find solutions and channel the money where you need it and where the marginal impact on energy transition and transition to low carbon economies will be maximum. So I think you just have to be innovative, to be very wired to the megatrends and thinking of societies, and of course identifying new business models and new financial solutions. There you can have an impact on the market. And last thing, I think if you want to really have an impact, a big one, then you have to change practices of the business, and that's what we try to do. We committed to do that for ourselves in the next 3 years by really making sure that in all our funds we fully integrate ESG in our arbitration investment decisions.
When it comes to the ICMA, you've kind of led on that, set the principles. Is that the future when it comes to the opportunities within sustainable finance? It's the green bonds, it's the sustainable bonds, or is there something beyond? Are these the stepping stones to something that we can't see yet, or is under planning?
That's a tough question. First, I mean, ICMA has played a key role in channeling what has been a remarkable market initiative. I mean, the green bond principles, which have now spawned the social bond principles, sustainability bond guidelines, were originally put together by a small group of investment banks, in fact. So again, one tends to criticize investment banks, and this was a great initiative, and it's been followed by investors, it's been followed by key issuers. And so what we've done is we've accompanied, we've helped support, we've helped formalize it, brought our experience in terms of self-regulation in the markets. Now, I would argue that what we have done with the market has reached a phase of relative maturity. We have the principles for the market. We've also are very active in extending guidelines on impact reporting. We've also done something very important this year, which is to reach out to the external reviewers. This is the community of outside firms that validate, for example, the environmental aspects of projects in green bonds. And this addresses a key issue, which is, what are the green bonds financing? What's the issue with greenwashing, et cetera? And we've had a very good dialogue with these external reviewers and talked about the substance of what they're doing, talked about potential conflicts. I mean, in some ways, these companies can act as a parallel with auditing companies, a parallel with rating agencies. In fact, some rating agencies, such as Moody's, for example, provide external reviews. S&P does also, et cetera. So, in a way, we've already taken this initiative very far. Now, where are we now? Where are we going? I think the big challenge is regulation. China's a regulated market. We've got a very significant regulatory initiative underway in Europe, which is around the EU's Action Plan on Sustainable Finance. I'm privileged to be a member of the technical expert group, which is actually implementing some of the, or recommending implementation of some of the aspects of this, particularly around a green bond standard, around a taxonomy for defining what are green economic activities. And so I think that the challenge is to find a symbiosis between the market initiative and some of these regulatory initiatives. I mean, there's some areas where it may be justified for regulators to intervene. I'm not calling for regulation, it's not my role, but I think certainly we should have a constructive dialogue. What we should avoid is overreach on part of the regulatory community, freezing the market, fixing things that don't need to be fixed. And then I think the next big challenge, and perhaps turning to Amundi as well, green bonds have already spawned through to social sustainability bonds, green loans now. How do we take this further to other asset classes? What can we contribute with the success of the green bond market, which indeed, very interesting market, but relatively small in the bigger context.
And that really does come down to it, isn't it, Stanislas? You've got, 1.74 trillion in assets under management, but only 15 billion of that is in green bonds. So the question is, if you want to move towards a major portion of the assets being, jumping into the opportunities, what do you need for organizations like the ICMA to do, or the regulators to do, to make it more conducive rather than punitive?
Yeah, well, first, it's true that we have more or less 15 billion under management linked to green bonds, but at the same time, we have 280 billion euros under management integrating ESG. So when we're talking not only about climate, but also about environment more broadly, or social issues and good governance, we have many solutions and a rather big portion, nearly 20% of our total AUM. But you're right, how do we make it grow? Again, our approach is really not to exclude or stigmatize. Sometimes you really have to do it because it's compulsory, the regulatory framework is clear, because there is a clear risk identified by the ecosystem, and for us it's mainly linked, for instance, to controversial armaments or to coal. And we also put some pressure on the tobacco sector. But really, we're more inclined to push towards best practices, new solutions, new opportunities. And how you do that, I think when you're starting integrating the ESG thinking into your business, then you're more connected to the ecosystem, to megatrends, to identify risks that have not yet been priced, the same for new business models, and also anticipate movements from societies and policymakers, which means that you can be ready with your portfolios even before there is a pressure on certain criteria or certain business models. So I think that's the way you do it. You just integrate more and more this broader approach of corporates, issuers, values, not only on the financial side, but more broadly on the ecosystem, and then you identify much more accurately at the same time risks and opportunities. For the time being, we documented more the linkage to risks rather than opportunities. But all this is rather new, so we also want to do that to contribute to the market thinking and to share studies and research on the way you adapt your ESG policy and screening to be able to identify opportunities.
Is there something that the ICMA needs from organizations like Amundi and vice versa? Is there enough of a conversation going on where the messaging is the same, or are we talking in separate silos to each person and each party involved?
I'm going to disappoint you. I don't think so. And I
Not disappointing at all.
but in fact, the dialogue with investors is really excellent. And Amundi is actually on the executive committee of the GBP, and so I don't think the issue is there. The issue is breaking out of this success we have in the fixed income and the debt markets. I think we need to look to what's been happening in the equity markets, which tends to be more on the disinvesting trend, and can we contribute some of the positivity we have in the fixed income side and bring that to the equity side? I think that would be positive. And I'd also like to rebound, if I may, just quickly on something Stanislas said. He was talking about risk when referring to defining green, and I think that's very important in terms of perhaps resetting some of the debate we currently have. There's a lot of discussion about what is green. There's this big initiative around a taxonomy in Europe, which some are concerned about. And conversely, there's this issue about, well, what's not green, what's brown, and then it becomes, again, disinvestment, punitive, et cetera. And I think it's much more constructive if we reset this around, as Stanislas was saying, about risk. I think we shouldn't be saying, you're a bad company. We should say, look, you're in risky activities. And one of the risks is you're going out of business. Now, you can go out of business in a way where you're transiting out of that business, or you can continue to dig yourself deep into a sector which is just not going to be there in 10 years. And that's a difficult conversation, but I think that's a better conversation than you're a bad company, to simplify.
That's very important, and it reminds me that we really have also to focus on engagement. So when we say we're not stigmatizing, we try not to exclude too much, it means also that we have to engage with issuers, with corporates, to assist them in their ESG strategy and performance, and also to push market practice to change in some areas we identify as key challenges, and also to accompany our clients, big clients, institutional investors, or also on the retail side, the big distributors, because they're very committed on these issues, and we have a lot of expertise, and we think that it's also our duty to share it with them. It's very important for us because it's a way to capture new market movements and innovations, and also I think it's very good for everyone because we can make things going faster on the ESG side that way. So I think on these issues we are in a world which is ready to cooperate and to do things together. And when you do things together, when you convince big institutional investors, for instance, to adopt a certain ESG strategy, you also have an impact on the market. So it's some sort of auto-realizing materialization of the importance of ESG because you can see it in shares price, for instance.
Well, that's a very simple answer, and I think that will resonate with a lot of people. I think the question would then be, if time is of the essence, in 2019, what would you think is the biggest thing that you're looking for to happen in terms of regulation, in terms of achievement, and in terms of growing this particular opportunity to the next level? Is there something that you're expecting in 2019? What's going to move the needle for you?
I would say on the regulatory side, I think what we've had in France is rather good. So it's very important for us, asset managers, to have data on which we can work. So when policymakers oblige corporates to report on risk, to report on opportunities, to report on their exposure, that's very useful for the entire system and financial sector. So it's true that if we have that, for instance, at the European level, that would help a lot. And we see it also being developed elsewhere in Asia, even at the state level in the US, for instance. So I'm not expecting too much on the regulatory side, but it's true that the reporting demands and obligations are very useful for everyone. For us, I think the big move would be a mainstreaming of ESG. So that's the position we adopted at Amundi, and I'm pretty sure that it will be widespread in the market in the coming years.
Nicholas, you're part of a technical committee. As a closing comment from you at the European Commission, as a closing comment from you, when you look at ICMA and what's happening in 2019, are you looking forward to some major goals being achieved, considering that we hear a lot of noise and a lot of rhetoric from, say, the United States, where it's not supposedly on a federal level, it's not priority, but it is seemingly moving everywhere else. Is there something that we should look for in 2019?
Well, first comment on the States. There's actually quite there's a lot of good things happening in the United States, contrary to what we may be seeing on the federal level. And so at the state level and institutional level, we've seen some remarkable initiatives, of course, in California, as you would expect, but also across the US. And recently, there's been a remarkable initiative from Fannie Mae, which is one of the biggest issuers in the mortgage-backed security market, and they have aligned a significant part of what they do with the GBP, so that if you look at the numbers now, the Fannie Mae is the single largest issuer in the green bond market. And so I think that's a very significant and supportive thing. That's one illustration. I think, generally speaking, we've seen a great internationalization of green finance. Japan has issued green bond guidelines. ASEAN countries issued green bond guidelines. China, of course, has been in the forefront. So all this is positive and needs to continue. In terms of the regulatory side, I think there are really two things. One, as we were saying, the work that's happening in Europe around the technical expert group, the action plan on sustainable finance is very important. If we do deliver a taxonomy, a green bond standard, guidance on disclosure, guidance on benchmarks, all this is very significant, very helpful to the market. And then finally, there's a very important initiative on part of central banks and supervisors called the Network for Greening the Financial System. And I think if they can make progress in the implementation of TCFD recommendations into the risk framework, into the supervisory framework, and ultimately into bank capital, and how you provision against climate risk and make it real, make it at the technical level, then we really have made progress. And this is something which can be achieved in the next 12, 24 months, and we're working on it.
Well, thank you for that, and thank you both for making sure that these opportunities are really top of mind for everyone, saying that it can actually be done if you put your mind to it. Nicholas, thank you, and Stanislas, thank you very much.